Good afternoon. This is Julie. It is Thursday, March 29th, 2:03 p.m. So we have another hour left in the trade room, or excuse me, in the afternoon. The trade room's closed. What am I saying? Another hour left for trading in the RTH session before the Easter holiday begins. And we rallied up on bad news rally. So I'm kind of scratching my head over this. Let's take a look at the economic calendar, and then we'll go back and look at the markets and how they reacted. Um, we came in and we got good uh, continuing jobless claim number. In fact, a very low print for history. You have to go back a long way to find a lower print than that. Um, 871. I mean, you have to go back quite a ways. So that was a good number. And but the initial claims were just, normal, pulling down a little bit, but certainly not anything out of the recent norm. So it was that continuing jobless claim number that was good. We got a good PCE deflator year over year. And 1.8, there's no result history for that. And the other PCE was in line, so we're getting a tiny bit of inflation. But what bothers me the most is this Chicago PMI. We missed on that, and that's a purchasing managers index, manufacturing sector in the Chicago area region. So that's a little bit bearish considering, all the manufacturing that we're supposed to be experiencing has not hit Chicago. And then we got pretty high consumer sentiments, although it did miss the expectation. So I'm kind of scratching my head on this. This is an continuing claims employment rally. So when they say sell the rallies, I think this is what they're talking about. But what I'm having to learn is you have to wait for the rally to get over and not try to sell it intraday at every single close or bar high like I was trying to do. So fading is one thing, but you have to kind of make sure you're watching the market and following it and stop selling those tops and bottoms. When will I ever learn? So we have a bad news rally today, and I'm not sure how bullish that's really going to be overall for this market. We are experiencing the last day of the month, the last day of the quarter, and the last day of the trading week. We don't have a market open tomorrow. So I think that had something to do with it. But we blew out 2.5%. So I'm sure they're going to be, talking about the market is back. And I would just, with trepidation, remind you that this is a bad news rally. And I don't think those are real bullish. So I would wait before tipping your toe in too high on this. For next week. We'll have to be careful. Let's take a look at the daily and see where we got to. See, we're just inside that big ass bear bar, right? And if we fib that big ass bear bar, we're at the 61.8%. So well, just depends on where this closes. Does it keep rallying up and try to get deeper inside of there, or does it start turning now on that 61.8? We'll just have to see. But anytime that we rally up on bad news, I think it's going to come back. And I don't think that we ever tested these lows. So be careful. I'm cautious. I'm optimistic. But like I said, that news wasn't great. And so when we rally up on not so great news, something's not quite right with that. So I hope y'all have a great weekend. Lessons learned for me today. I got to follow the program. Um, Show you the high-low 2 real quick, and let you know that the trigger 3s were fantastic. They would have all been winner chicken dinners. Let me highlight the 3 for you so you can see it. So there's 10 points. So 10, that's 40 ticks. So you can see 30 ticks as well within there. So 30 or 40 ticks stop would have had you winners on each one of these, coming back and getting your profit target and more. Down here also. So the system is working. You just got to trade it. Note to self. So sell the rallies. Yeah. Got to wait for the rally to get over first. This is Julie, J Auto Trading Strategies. Oh, wait. Sorry. Got to show you one more chart. The high-low 1, my awesome chart. Because of the extra volatility, make sure that you are using a larger bar size, and that'll help keep you in the market. Here's that 40 tick bar. If that's too big for you, at least do a 30 tick bar. That's your stop, right? That's your stop amount. So do the 30 tick bar for your stop amount on the high-low 2, the 30 tick, 30 or 40 tick, and this will help also tremendously. Um, so you want to be taking trades back in the direction of the market when the market corrects itself and is trading in the direction of that high-low 2 and in the direction of your linear regression, which we had today. So if we stick to the program, I think we're all going to be fine, and widen your bar. And I think everything will come out roses for us all. So here are those reversals long, and just take your 30 tick stop, and you see what I'm talking about for those profit targets. Just hold them and go up. All right. Hope y'all have a great weekend. And trade room's closed tomorrow, and we will see you Monday. Bye bye.